Good afternoon, everybody. Hope you had a great week this week. Lots of harvest progress taking hold in Ford and Iroquois County. Markets ended up being mixed on the week. December 22 corn was up 3 cents, and November 22 beans were down 60 cents to close out the quarter. Soybeans closed today on Friday at $13.66 per bushel. Earlier in the week, we tried to break above some short-term resistance levels and couldn't quite get the job done. And then on Friday, when the USDA report was released, we saw a lot of support levels melted through very quickly and ended at some supports that we haven't tested in quite a while here. Short-term money flows are starting to bottom out, so that could help relieve some of the selling pressure here in the short term. Strength indicators, though, are in the intermediate term decaying and continuing to correct to the downside. So hopefully that will start to slow here pretty soon as we do enter harvest. The trend is more likely to test supports that were formed in July and August as long-term momentum is turning over rapidly here. Right now, favor a test of those support levels compared to testing the highs that did take place or making new highs for the time being. Price support is $13.64, followed down by $13.45 per bushel. Price resistance is $13.83 and followed higher by $13.92 per bushel. Managed money exited about 9,000 contracts of beans this week and are still net long 94,000 contracts. Corn closed the week at $6.78 per bushel. We did end up higher on corn, so we did have a mixed trade. Price consolidated through Thursday. We were pretty choppy and range bound, but one good thing we did do is build better support between $6.65 and $6.71. On Friday, today, when the USDA report was released, corn bounced and shot higher really quickly to $6.96, and that's a resistance level area that I've been talking about the past couple of weeks, and it was rejected immediately. So that is telling us there's a lot of sellers at that level, and it's going to be hard to get through, get price above there. We closed today at short-term moving averages, so those are acting as support here in the short term. Money flows are bottomed out and turning higher, so that does give me a reason to believe we could test at least that resistance level at $6.98 one more time, hopefully, in the coming days. We will need some bullish volume to confirm that. Strength indicators did consolidate this week and are trying to turn back higher. They do look more bullish than soybeans at this point in time, as that is reflected in price. Long-term momentum did roll over this week to the negative side. We have a chance to resume higher, but we would need to make higher highs in this short-term uptrend that we've been in. For now, long-term momentum does have weakness to combat, and it does favor the downside, but still have some work to do, and if we can get to higher highs here, it would resume its uptrend. Price support is $6.71 per bushel, followed by $6.65, and we do have resistance at $6.87, followed by that big one at $6.98. Managed money sold about 10,000 contracts this past week and are net long 237 contracts at this time. General updates. The USDA Quarterly Stocks report was released today, and that created some volatility to end the week. We were basically waiting all week for this report to be released, and that's why we saw a lot of range-bound trading. It was a bullish report for corn and fairly bearish for soybeans, probably a little bit over of reaction for soybeans. The USDA pegged corn at 1.37 billion bushels, lower than the trade estimate of 1.51 on ending stocks. Soybeans came in 30 million bushels higher than the expected trade at 274 million bushels. The U.S. dollar continues to put negative pressure on our commodity prices. Our currency is so expensive right now that we are being priced out of the world market for exports, and our demand is starting to slip. Hedge funds have also put negative pressure on commodities and other asset prices, and they are liquidating their risk to buy the US dollar. They are currently nervous about recession and the interest rate hikes that took place last week with different central banks. The Russia-Ukraine situation continues to get worse. Russia has now annexed part of Ukraine, and President Putin signed that deal today, actually. The current grain deal runs through November. If they cannot ship grain after that, out of that Black Sea corridor, that would be more bullish for U.S. corn and wheat prices. Moving on to crop insurance, the RMA has deferred interest accrual on multi-peril policies. The statements show they are due today. The premiums are due today. However, they will not charge you interest if you choose not to pay them until November 30th. Hail premiums are still due on November 1st, so please make sure that you notice those are two separate policies on your statement, and please get those in earlier than the MPCI premiums. If you have any questions or comments, please call our office anytime. We want to thank you for your business. Hope you have a safe harvest. Call us with any questions anytime. Thank you.